Well, it's good to see you again, Caesar and Cordelia. We have been putting in a lot of hours into the audit of Fox Corporation, and we're happy to meet with you today to discuss some of the issues that we have found. Before we get to those, we want to emphasize that we see ourselves as your partners, and our goal is to provide you with services and advice that will help your business to grow, inspire confidence in your investors, and aid you with financial reporting compliance. So I'd like to reintroduce my team to you. I am Matt Barnhill, the lead partner on this engagement. To my left is Carnisha Wolf. She's a manager, and she's actually without a speaking voice today, so she's kindly offered to take notes for us. Stephen Stoll, senior manager, Kim Pinkerton, associate, and Anson Chen, senior associate.
Nice to see you.
Please feel free to ask questions, voice concerns as we progress. The first issue we'd like to talk about, yes, sorry about that, here's our agenda for today. The first issue we'd like to talk about is audit committee composition. We do have a few concerns about the current composition of your audit committee, and we just want to make sure that you have as much information as possible about the regulatory requirements and the business motivations behind those requirements so that you can make the best choice for your company. To start off with, I'm going to let Kim talk about the legal requirements laid out in Sarbanes-Oxley.
Hi, it's so great to see you guys both again today. I wanted to bring two major points from Sarbanes-Oxley that we thought would be really important for you to note when making your audit committee composition. And the first issue is that with the independence of every member in the audit committee, it is essential that they don't work in the everyday business of the company to be on the audit committee. They can, however, be in the board of directors as well as the audit committee. And the second issue is you do need to have someone with financial expertise. This can be gained in many different ways, and the first way it can be through education or work experience or being a CPA. So now I'm going to give it back to Matt, and he's going to talk about best business practices about the composition of your audit committee.
So as you know, the role of the audit committee is to ensure that the audit is conducted with proper independence. And so it makes sense that the members of the committee themselves be independent, which, as Kim said, basically means that they are not also part of the company's management. This allows them to assess more objectively the quality of financial disclosures.
So are you saying we have an issue?
I feel like there's something he's about to say. I'm waiting for it here.
Yeah, we two of the members currently on your board are part of the company's management. We actually have an exhibit we'd like to give to you that just summarizes the criteria for selecting members, and having independent members will, we believe, improve the quality of reporting and oversight of internal controls within your company. And this is because having independent members allows them to act free of influences that management might have to act in their own interest rather than in the company's interest. So to summarize, the two main criteria are independence and financial expertise. We are not here to choose your committee for you. We just want to make sure that you're aware of the issues so that you can make the best choice for your company.
So it looks like you identified two of the three of us that have issues. Is there an issue with my participation on the audit committee?
We don't feel that there is, since you're not part of the company's management.
Okay.
And since you have had a long-term relationship with the company, we feel that you would have adequate financial knowledge.
So you're basically saying the issue is me and Kim, who's not here.
Right.
Okay.
And what's the timeline of making the decision? Is it immediate or?
Well, we feel that this is something important that you would want to address as soon as you can.
Okay. to know. Thank
So
you.
we can maybe go through this audit year, it sounds like, and then maybe deal with it right afterwards.
I think so. I think that would be appropriate.
Okay, okay. Well, we'll take it under advisement, okay?
Okay.
Oh, thanks.
No problem. The next issue we'd like to touch on a few things to do with internal controls, and I'm going to let Stephen introduce that.
Thanks. Kim and Anson both work together on test of controls and test of transactions, and there are a couple of internal control issues that have risen, and they're both going to touch on that briefly. The three areas are with contingent liabilities, HR policies, and allowance for accounts receivable. And Kim's going to start.
Carnicia's going to give you a letter that is from the lawyers that basically states that there's a contingent liability that is both probable as well as reasonable. It is common accounting practice that when a contingent liability is considered to be both probable and reasonable, it does need to be on your books. However, we do know that management has some disagreements about why this account is considered reasonable as well as probable. And because of this, we had a kind of an issue just because we wanted to make sure that there was a corporate policy of when this is going to be reported. So I actually have an example for you that Carnicia's going to give you that is from the 10K of one of your competitors, IMES, and it's actually Procter & Gamble owned company. And it basically kind of states their policy and contingent liabilities and stuff like that. Do you have any questions related to that?
Well, I'm gonna have to read it first, but are you saying that we don't have a policy?
It would appear not from our interpretation because with the management disagreeing with it, they just have not reported it, which is definitely concerning for us.
Mhm.
However, if management still has concerns, we would recommend having a meeting between management as well as the lawyers and you guys to kind of mitigate it. And by doing this, it would kind of illustrate what problems they might have and kind of talk back and forth and have the best solution.
Okay, no, because I think we probably feel fairly passionately about our position,
Yes.
and so we might need to schedule such a meeting or
Yeah.
additional discussions around it.
I think that's warranted.
Yeah.
Okay, if you have no further questions, Anson can talk about some HR issues we found.
Yeah, thank you, Kim. And I work with at the HR heads, and we understand that recently you have a new CFO and a new COO coming. And because this is our first time audit, we'd like to understand what procedures you have taken regarding HR policy. So I discussed with Mr. James Miller, who's the HR director. And the good news is that the HR department has received a preliminary report with no material findings. However, the final form of the report have not yet been received yet, and we have to request it again as part of our audit evidence. And based on our experience, such as PMG, as Kim just mentioned recently, we recommend the HR department finalize the background investigation before the new hires start to work full time. This will help Fox Corporation maintain and attract the best talents and make sure they stay free from conflicts of interest.
So is there any implications to the audit? I mean, obviously it sounds like we're maybe not up to par with our policy at the moment, but is there any implications that we should be aware of other than we should do better with the complying with our policy?
There's no immediate or direct influence on our audit this year, but we will recommend that next time when you hire a new executive level position, and we understand that the turnover rate for this levels, the hires was high, but we definitely recommend as a as the best business practice, you finish the background investigation before they start to work full time. Okay. And Kim will continue with the third finding.
Hi. When we were doing our auditing procedures, we noticed that there was an immaterial misstatement in your collection for uncollectible accounts, which we talked to the assistant controller after we found this discovery, and he said it was due to a computer glitch and that he has corrected that glitch by talking to IT and it's not going to be an issue in future periods. However, we did want to bring this to your attention primarily for two reasons. The first one is the PCOB has recently passed a new auditing standard which basically says that any uncorrected immaterial misstatements need to be brought to your attention, as well as the fact that when we spoke to the the assistant controller, he told us that there wasn't an internal control process to kind of check for the completeness of this account, which since we're looking at your internal controls at this time, that was kind of concerning for us.
So what's the implication from an internal control perspective? I think I think we'd all agree on this side of the table that it's immaterial, but I think the more concerning part is the second aspect you were speaking of.
Yes, it's definitely more concerning that it's like the issues compounded together that creates like an internal control issue more than any of these issues that we've addressed individually. So it would just, we're going to talk a little bit in the future about how this is going to affect our audit scope as well as audit fees.
So you're still kind of working through the impact to the audit?
Yes. Steven's actually going to talk about your audit fees.
All right.
Yeah. Due to these internal control issues that we have discussed, we are going to need to increase the scope of our audit in order to make sure that no other issues have been overlooked. But in addition to this, Fox's recent acquisition of Bow Wow Inc. is also going to increase the scope of our audit, and there will be some adjustments to the original fee, which was set at $1.2 million.
What's the increase?
I'll get to that point, but first I just wanted to explain why this acquisition will increase the scope of our audit.
Okay.
We had not originally incorporated the potential impact of this acquisition, as we were under the impression it was going to be finished in 2013. Instead, it was completed in December of 2012, which will result in a substantial increase in our audit work. First, consolidated total assets increased dramatically from $349 million to $650 million due to the acquisition. This means that we will need to test inventory in Bow Wow's 4 warehouses in addition to Fox's original inventory. This will increase traveling as well as an increase in our overtime hours. Plus, the acquisition, the consolidation has also brought new assets to the balance sheet, including goodwill. This presents new challenges, for instance, impairment testing, and we will need to increase the testing on the increase in inventory, fixed assets, impairment, as well as tax provision. Next, also as a successor auditor, we will need to review the prior auditor's work papers in order to determine if their scope of their work and their materiality level can be relied upon.
So,
Does he do that?